Let today be the day you give up who you've been for who you can become. Hal Elrod. And my friends, what does that take? That takes committing to doing things another way. And our way is 10 to 15 minutes each and every day. You never miss a day in the market. You follow your favorite charts. You practice trade them when there are practice trades to be had, and you learn how to do this by doing it each and every day. You can do it. I'm your biggest fan, and I believe in you. All you got to do is stick with it, my friends. Don't give up. Be true to yourself and be true to the truth, to what is actually going on and what is real. All we care about is price movement and projecting that into the future accurately. And of course, when you look at a beautiful chart like the S&P 500, look how gorgeous this is. I mean, it goes from red to green. It goes from green to red. You can see those moves. We're going back, almost a year here. We see one time period when it got sloppy right here. And you could have taken that loss easily and then captured a gain and another gain and another gain and another gain. You might say, Tom, wait a minute. How do you make money in your practice trades when the market is going down? It's called inverse funds. There's a very simple inverse fund for the S&P 500. It's SH. What does it do? Well, it goes in the opposite direction. When the S&P 500 is going down, it's going up. And of course, like's happening now, when you see the S&P 500 going up, SH goes down. But it goes in the opposite direction. It's a simple inverse fund. I'll put that inverse training at the end of today's video. For those of you who are not familiar with that training, it's called Inverse Funds, How to Make Money When Markets Crash. You will like it. Now, let's jump into these charts. We see stocks are mixed for the day. Bonds and Bitcoin are down. Gold is up. Let's jump into these charts. Now, we see that the S&P is down a little bit for the day, 0.19%. That does not stop us from having a week that is starting off with a green up candle. Why? Because these are Heikin-Ashi candlesticks, and they're showing us the average pace. You can see where the market bumped up in the morning on the half-day chart, pulled back in the afternoon. We look at the two-day chart representing Friday and Monday. You can see that it's an up candle. And again, excuse me, things are continuing to move in the right direction. We'll be paying attention to what's going on as we go through the course of the week with the volume. Volume, it's only one day of a 5 day, so we'll see if volume's going to continue to move up toward the average or hit it, if it's going to fall below it, if markets are topping. We don't know yet. It's just Monday. Let's go now to where we are on the Qs. The NASDAQ 100, it was up a little bit, 0.07%. You can see where it popped up in the morning and then pulled back a little in the afternoon. It actually hit a little bit higher during the course of the afternoon. But again, as we look at things, why does that not look right? What is going on there? Trying to figure that out. Let's see. Is that actually accurate as it translates to the other chart? What I'm going to do, sometimes I wonder about these. I'm going to recreate that and see if it changes. Sometimes they don't seem to move with it, but it could just be the intraday play there that I'm just not seeing. And it is. It's the intraday play. It looks a lot flatter there. I'm just not understanding that. That does not look the same, does it? Anyway, well, we'll see how the week continues to play out. We can see that price is above on both the half-day and the 2-day, the weekly trend line. And that just looks way flatter than it's supposed to be. You know what? It may be, well, let's see what happens. Where is this going out to? See, that's what I can't figure here. I'm not understanding what that bad boy is doing. And sorry to make you guys go through that with me, but when I don't understand something on the charts, I want to make sure that I am not misapplying the data and the information. Now let's redraw that here. See how it's going up there? But then the minute we connect it to here, when I move it, now it's I don't know what that's about, why it's different now from how I moved it. But again, we can see what I said before, that price is above the 2-day. But you see how sometimes when you see stuff that doesn't make sense on the charts, when that happens, question what the hell it is you're seeing until you understand that what you're seeing is accurate. We can see on the half-day chart well above. 2-day is above. We're talking about this weekly trend line here, and we will continue to watch and see if there's going to be another week of continued rocketing up based maybe upon just the sheer fact that we continue to print money back to buy nothing and spend money, not even like a drunken sailor. A drunken sailor stops spending money when he runs out and doesn't have any more to give to the barman. Here, we just print more and just keep spending. So what does that mean? That means that real stuff like stocks continue to go up in value because they're real. They're backed by real things, not funny money. So we see that, again, week is starting off with up candles in stocks. What about bonds? As we go to bonds, we can see that, again, sliding sideways down a little bit for the day, 0.19%. But as bonds had gone down, sort of accelerating over the last 4 weeks, ending that week beginning the 22nd of May, for the 2 prior weeks and this week so far, sliding sideways. So we'll keep our eye on things. We can see the prior 2-day candle representing Wednesday and Thursday of last week, and this candle, the latest completed 2-day candle representing Friday and Monday. Today, we see that it's sitting right there on that weekly trend line. We can see where the half day is rolled back below it. So we'll see as the week continues to move on if we continue to move down in bonds. Gold, down. It is showing down candles. It was up for the day, 0.60%. That happened at the end of the day, still below that weekly trend line on the half day. And on the 2-day, a doji, lots of indecision there. We'll see if that indecision turns into more down moves, starting the week off with a small red down candle going a little bit lower. So, well, that was deceiving, wasn't it? I was looking at these extra dashes here. But not as low as the week on starting the 22nd of May. So we'll keep an eye. Do be aware of that when you start moving these dashed lines. See, it looks like it's a longer wick on the bottom than it is. I've learned not to trust that like I did. Move it to the side. So we will continue to watch, wait and see as gold is below the weekly, on the weekly trend line, is below on the 2-day and the half-day charts. What about Bitcoin? Yay. Moving back in the down direction like I wanted it to. I did not want it to pop up again. Don't like that green candle from last week. But again, I want to see Bitcoin retrace for a while before it starts to move up again in earnest, so that hopefully we can start getting charts that are chartable. That's what we want more than anything else. We can see prices below the half-day and the 2-day on that weekly trend line with the red candles starting the week out down 6.34%. That is where we are on Monday. We will be continuing to watch and see if stocks are going to keep going up, bonds and gold are going to keep going down, and Bitcoin is going to be retracing, so that hopefully we can get it to shake out and start setting a good trend again, up or down, just so we can follow it. That's all we care about. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.